South Korean exports are completely blowing everyone away. And today we're taking a look at some absolutely crazy numbers out of South Korea. So this is the graph that we have here of South Korea exports. As you can see, we've had like a long run in this AI boom, and now we have the last year gone completely vertical on the exports, and there's not enough data on the year to year, but you can see here inside TradingView that we've had this surge up year over year. And what's happening is that the South Korea exports, the semiconductor exports, is soaring to 199.5% to a record $45 billion. So that's just absolutely mind-blowing. And computer exports are also surging here more than 300%. So this AI bubble talk that is out there, I don't know necessarily where it comes from. I do know that it comes from all the PEs and all that people look at, but we still have just so much export going on. And if we go in here and look at more macro numbers, we also have inflation rate from Spain month over month coming down to 0.6%. We have a stable inflation rate year over year in Spain at 3.2%. Then we have yesterday, we also had inflation rate in France down to 1.8 from 2.4, and a negative inflation rate month over month. Same for Italy. We also have year over year down to now 3%, and then inflation rate also in Germany to 2.3. And this means that the inflation now looks a bit more transitory, and that the ECB, so the European Central Bank, might have to start thinking about not hiking the interest rates and instead take a different stance, because this looks to be transitory. In other news, we also had the Chicago PMI, so you could say the business cycle index for Chicago, coming in at 56, a little bit lower than expectations, but still in the expansion range above 50. So that's positive. And we also had a really good number, 7.6 million in the job openings, which, as you can see here, now we're starting to go back up again. So this is positive for the market. And otherwise, we had yesterday, we had MicroStrategy, which I've shown a few times here, down 6%. I think the market is realizing that everything that he's trying to do, Michael Saylor, around selling Bitcoin is negative. The stock actually rose 2 days ago 12%, but then yesterday it fell 6% again, as it should, in my opinion. We also had Bitcoin yesterday down 3%. And it almost made a new low here in this bear market. In other news, we had Ouster, so the ones that are doing LiDAR, up 16%, tied to NVIDIA and their Hyperion platform. And then I think the biggest news probably within stablecoin and blockchain was the OpenUSD project with Coinbase and Stripe and Visa and so many more companies collaborating for a new stablecoin. And this is in direct competition to Circle, which is the graph that we see here, that was then down 17% yesterday. I own Circle myself, and this is not super negative. It shows competition, and there should be competition in this market as well. So we will see how Circle will fight back and do in the longer term. So I'm still holding this position, and but I wanted to show you, of course, that these are major news. I think that's mainly it for the market. The last thing I wanted you to see is that the US has now lifted exports restrictions on Anthropic's Fable 5 AI model. And on top of that, they say here that they will work with Washington to expand access to Mythos 5. So they're opening up to the full model, because Fable 5 was still a smaller model than Mythos, and now they're looking to how they can open it up. This was expected as well. It's actually bullish, and it's actually positive that the government sees this technology as so important, critical infrastructure, that they have to go in and get first-hand access to Anthropic, OpenAI, And I think this will continue. This is not a bad sign. We will get the models either way. We just get it a little bit slower, but the US needs to be sure that China does not get its hands on these models too fast. So there will be a little bit of a delay. That's okay. All right, that's all from me. Thank you, and see you in the next one. Hey.